What's up, everyone? It's Scotty with Moneyvesting. Welcome on board for another Market Open live stream here. So we got the Dow down a little bit over 50 basis points. We've got the S&P 500 ETF SPY down about 1%, and of course the Dow Jones dropping over 1.7% right now. So obviously, yesterday we had a very strong day for the markets. Nasdaq was up 1.66%. The Dow rallied over 2%. The S&P was up over 1.87%. But then Snapchat, after hours, announced some very, very weak guidance, even though it wasn't their day to announce any earnings, but they are already warning investors for the second quarter earnings, and everything just absolutely turned. Meta Platforms is down over 7% right now. Google is down over 4.5%. Tesla, Amazon also selling off on the day so far. Tesla's down over 3%. We got Amazon down over 2.3%. Google down over 4%. PayPal 1.5%. Meta obviously taking a big beating here. Pre-market trading as low as 180, down over 8% as well. So thank you so much for joining, everyone. I really appreciate it. Make sure that you drop a like. So Stefan, it is coming. It is coming. Don't worry. I have ordered it. It will be here sometime this week. It will get shipped and be delivered before the end of this week. So don't you worry. It's on its way. The green mic is. But wanted to go over the earnings, obviously, and before that, let's just go over a couple of things here. So this was something that I shared with everybody in my previous video, talking about Bard's market gauge and some of the favorable and unfavorable market environments. So this is basically what is positive or quote unquote favorable for the markets right now for US equities. So here's 16 building blocks of the markets in two categories: favorable market conditions and unfavorable market conditions. And they basically use the difference between the two gauges as the overall environment for US stocks. So favorable, we got corporate earnings, we got economic growth, we got liquidity, sentiment, US dollar, fiscal policy. I go over in a lot more detail in some of the other things like in my previous video, so make sure that you do check that out as well. And of course, unfavorable, the first thing they listed was the red mic. So we definitely need to change that. That's something that we do control. Budget trade deficits, we got commodity prices, global trade, inflation, and monetary policy are two things that are super important, that are probably the biggest and the most unfavorable items here on the list, that are creating such a big roadblock for the markets to rally higher, right? That's probably the biggest roadblock for markets to have any type of sustained rally. And we're not actually able to close at a higher high or change any type of direction because of those two things, right? They have been the biggest headwind for the markets right now. And of course, technical picture has worsened because the markets have really been sold off. We're trading below the moving averages for the broader markets. The indices and individual stocks and valuations have also come down, but there's also some scares around growth expectations and earnings per share. And if that actually starts to really slow down, then valuations are still high. And that's exactly what Bard also mentioned, that if you take a look at earnings slowing down, then valuations may not be as cheap as what many people are anticipating for the markets right now. So we clearly have more unfavorable market environment than favorable. So this is really not the market where stocks are going to see these huge swings to the upside or these big rallies that are actually going to change the direction for the markets. We're still going to be in a bear market in my view. We're still going to be technically oversold. And we could still see like these bear market rallies, these mini rallies that could result in a very short-term relief here. So Ray Dalio says cash is trash and equities are even trashier. So reading further, he says, of course, cash is still trash. You know how fast you're losing buying power in cash because of high inflations, but equity is even trashier. And the founder of the world's biggest hedge fund said having a global and well-diversified portfolio in this market is important. And real assets, physical assets such as real estate, energy, infrastructure are where investors should consider going in an inflationary environment. So he says, and I quote, "We have shifted into an environment where assets that do well, almost like in the 70s, are real assets, real return assets in various ways are the best investments," Dalio said. But if you take a look at almost all sectors right now, everything is yielding negative returns, right? Everything is even if it's bonds, I mean, whatever cap rate you can get on real estate, whatever, internal rate of return you can get on a property with rental income, whatever, that is still going to be yielding negative rate of return because of inflation. So, but, I do get his point that equities and cash are losing even more. It's right. So we're in a type of market where it's like almost all asset classes are down, right? Equities, bonds, commodities, cryptos, real estate is the only one that's holding up on a 1-year basis when you look at the prices. But every single thing is down. It's just about what is down less, right? We're not in the type of market what is going up more. We're in a type of market what is going down less. That's the type of mentality we have right now. And that's the type of market we're in. Because there's no place to really hide. There's no place really, quote unquote, safe right now. Even if you're in bonds, sure, you're getting that risk-free rate, but the yields are negative because of inflation. And obviously cash is losing buying power. Equities are straight up going down, and bonds have obviously underperformed as well. So there's no place, quote unquote, fully equipped for the current market environment. It's just about what is going to go down less in this environment. That's the type of market we're in right now. And Snap obviously put a lot of cold water in yesterday's rally here, dives 32%, and it's dragging other stocks down with it. So not only the stock itself went down, it also took down some of the big names like Google and Facebook and some of the other companies. And that's the type of environment again we're in, right? So even a small company like Snapchat, which I don't know, the market cap last time I checked was like really, really small, like probably like under 30-40 billion dollars. But Snapchat, let's take a look, has a market cap. Right now it's down 34%, market cap of $36 billion, right? That's going to be cut by a third after the open today again. So we're probably going to be sitting, under $25 billion roughly. And it's just like one of those times where you get the markets are so vulnerable. If somebody coughs, that's going to result in the markets to go down, right? That's enough to make the markets go down. But Snap shares plunged 32% pre-market, setting the company up for its worst day ever and dragging down their other social media and digital ad company stocks as well. And tumble comes after Snap issued a warning on Monday, which they weren't required to do that. There's no reason for them to issue this warning 2 months prior to their actual earnings on a Monday, telling investors that they won't meet their own targets for revenue and adjusted earnings in the current quarter. So it would have just been delayed had they not issued this warning. They would have just went down during the earnings, and during the earnings it might have been more or less about the same. I don't think that Snap would have been down more than 34%. It's just like their earnings got pulled forward. That's all it is. Like now investors are going to just expect a really miserable quarter, and the stock on that day is probably going to be either flat because everything just got priced in 2 months early, or it could slightly go higher if there's anything that Wall Street seems to like on that day. But anyway, since we issued guidance on April 1st, 22, the macroeconomic environment has deteriorated. Okay, so in less than a month, the macroeconomic environment has significantly deteriorated for the company to have completely changed their outlook and their guidance. But anyway, Rosenblatt upgrades Snowflake to buy from neutral. We got Bernstein initiating DoorDash as outperform. Daiwa reiterates Disney as a buy. Bank of America reiterates Apple as a buy as well. And what is this? Forgot about this number. Bernstein reiterates Tesla as underperform. Citi reiterates Netflix as a buy. Bank of America reiterates Snapchat as a buy as well. So after this sell-off. And then we got MoffettNathanson reiterates Coinbase as a buy. They did lower their price target to $200 from $600. That's about a 67% cut in price. And JP Morgan also reiterated Boeing as an overweight as well. All right. So this is, I think, part of that Ray Dalio article. So the Federal Reserve and other central banks around the world have begun pulling back their extraordinary accommodative monetary policies, which could create an imbalance in the markets, the billionaire investor said. So the Federal Reserve is going to sell, individuals are selling, foreigners are selling, and the US government is selling because it has to fund its deficits. So there's going to be a supply-demand problem, and that means it produces a squeeze for the markets right now. So this right here is actually going to be the entire history of the S&P 500 going back as far as 1928. Let me just expand that a little bit. There we go. Going back as far as 1928 and all the returns for the S&P 500 for 95 years. Yep, so 95 years, almost 100 years, and how well we've closed up or down. And for 2022, obviously, we're down 16.63% so far this year, which is one of the worst starts to the S&P 500, but obviously not the worst year for the S&P 500. And we'll do some more analysis on this later on, but I just want to run through this updates here. So this is, again, going to be the earnings per share, the S&P 500 price itself, the trailing 12-month price for earnings, the averages overall. And this is a nice sensitivity analysis table, which basically goes over where the S&P 500 would be based on different market multiples and different earnings per share. for 2022. So let me just put that 2022 here. So that simply means that if the earnings per share are a different number, 180, 200, 220, if they do get revised up to 40, 260, 280, which is highly unlikely, but we have those numbers here. And then given the multiples of where the S&P 500 would be in those situations, in that scenario. So we'll talk about that in more detail as well. But let's take a look at the entire market. We've got about 13 minutes left for the markets to open. We do have, I believe we have the GDP numbers coming out today. Could be wrong, but I think we have the FOMC minutes tomorrow from the Federal Reserve, and the GDP numbers also sometime later this week. Not sure if it's today or tomorrow. But yeah, let's just do a quick poll. Did you add more Meta? So I will. Sub 180 would be very interesting for Meta platforms. So we'll be looking into that as well. But let's take a look at our poll here. Let's see what you guys think, whether it's going to be green or red on the day today. And don't forget, this is the 8th week we're going into a potential sell-off here. So first 7 weeks have been very brutal for the Nasdaq and the S&P 500, and for the Dow it's been 8 consecutive weeks. So we're going into the 9th week here. So GDP is also a thing on Thursday. Yep. So yep, got that mixed up a little bit. Thursday, and then I think FOMC minutes are going to be tomorrow. So those are going to be some very important numbers. And by the way, Raphael Bostic, I did spend about an hour listening to the guy yesterday in the Atlanta Rotary Club. That's where he was talking, and you can actually look it up. You can go over and type in May 23rd, 2022, Raphael Bostic speech at the Atlanta Rotary Club, and you'll get that entire one hour live stream. But what he really said was obviously things that we already know for the most part, that inflation is high, and that's one of the biggest main goals for the Fed, to bring inflation back down under control. But one of the things that he pointed out and mentioned is that after September, so after September's meeting and after that hike, they are potentially looking to pause the tightening. In other words, potentially looking to pause any type of rate hikes any further, right? So the goal is to get up to 2%, and 3 more 50 basis point hikes is going to put us roughly at 2.5%. And I think that would be appropriate. It'll put us roughly between 2.25 and 2.5% for the Fed funds range, target range. And I believe that's going to be appropriate. But again, it depends who you ask. If you ask Kathy Wood, she thinks that the Fed's already overdoing it and they're making a mistake. But then if you ask other economists and other members of FOMC, it's like we're underdoing it. We're not doing enough to bring inflation down. So that's why we've got such a divided market and such divided views on monetary policy right now. But he believes that after September, the financial conditions will start to improve, and the expectations are for inflation to also come down. He's not too much focused on the year-over-year inflation, but instead the month-over-month change, and that needs to come down substantially for both total CPI and core CPI as well. And after September, they'll be looking at potentially pausing their rate hikes, which could be the pivot that we're looking for in the fourth quarter. That could lead to some epic rallies in the markets, and of course potentially a turnaround from the Fed. And that's something that we also discussed in my just recent video, where we talked about these things need to change in order for us to recover back to all-time highs. Until that happens, it will still be a headwind. And I hate to kind of bring this up again, but interest rate hikes and inflation are still going to be headwinds for the markets, and until those things resolve, it's going to be very difficult for markets to sustain any type of rally back to all-time highs. And until then, it's more about accumulating, dollar cost averaging, accumulating. So, all right. GDP is on Thursday. Yep. So higher lows Meta at about $180, red across the board. So 77% expected to be red here, with about 22% expecting the markets to be green. I think that's very fitting. It's very clear that the markets have obviously been under a lot of pressure. But Friday's price action was good, right? So we didn't quite sell off down to Friday's price action, which was May 20th. The Nasdaq at 11,000, the S&P at 3,800. Those are very key levels that we need to watch for the broader indices, right? For the broader markets. So due to corporate earnings coming down, So, all right, due to corporate earnings coming down, they are going to lay off people. More unemployment equals less spending, etc. I don't see the market rising this year. Yeah, so that's another thing that we have discussed. Unemployment, right? Unemployment right now is or was one of the bright spots for the markets at 3.6%. That's also something that Jerome Powell's mentioned time and time again. We're in a very tight labor market. We're in a very strong labor market. But I've addressed my concerns with that number and how that's going to potentially get worse as we have read several earnings reports and transcripts. Companies are overstaffed. They have overhired. And there's also hiring freezes. I just read Uber is going on a hiring freeze as well. They're not going to be hiring any more people, but they also said they're not going to be laying people off. But when you do have this collective measure of companies, starting to freeze hiring, and at the same time, companies that are overstaffed and overhired over the last couple of years, and they start laying people off, that obviously puts a lot of pressure on the labor market. So right now, or we were in a situation where there was a shortage of workers. Companies were struggling to find workers. I don't, in my opinion, it won't be long until this entire thing's flipped. And then now, unemployment is going to start potentially pushing higher, and there's going to be a shortage of jobs potentially in the future. So that is definitely a big headwind. But the Fed will have a big role to play if and when that actually happens, because they will then need to decide, do they want to keep raising rates into a slowing economy? And do they still want to raise rates during a worsening unemployment situation? Because that's the situation right now, right? And that's what Nancy Lazard from Piper Sandler also mentioned, that the Fed is raising rates into a recession, which is like one of the most unusual things we might be witnessing right now, that the Fed is raising rates into a slowing economy right now in the U.S. So, Carlos says, I was fired because I wouldn't buy Snap IPO back in the day. And look where Snapchat is today, right? Pretty crazy. Yeah, so inflation in the U.S. is still very high as a result of supply constraints and as well as strength in the consumer. The Fed has no choice but to keep hiking rates. Yep. So I think right now, they have no other choice but to keep raising rates. But as supply chain issues improve and the demand also goes away, because we have already heard consumers are not spending on the same items as they were last year or the year before that. In fact, they are even finding a little bit shortages when it comes to actually spending money on other things, right? They're spending the same amount, if not more, but getting fewer items because of inflation. So spending habits are shifting for the consumers. So that will help the Fed in their battle with inflation. And of course, supply chain, if they do get better, that should also help bring prices back down with excess inventories, with surplus of inventories as well. So Alex, thank you so much. I really appreciate that donation to ease your pain on Amazon Facebook Caddy. Good luck to all of us. Thanks always. Thank you. I appreciate that very much. Those two stocks obviously have been selling off quite a bit, along with obviously Snapchat now coming down to as low as $14-15. I think this might be a new all-time low. It's not an all-time low for Snapchat. The lowest it's gone down to is about $4.70, and during the pandemic, it actually went down to as low as $8 a share before rallying about 1,000%. And we've got another mountain chart on our hands where stock went up, and just as fast as it went up, it's come down twice as fast. Kevin, what's the deal with monkeypox? Is it all just FUD? I have no idea, man. I've been reading those articles myself, and I'm just like trying my best to wrap my head around what's going on. And I'm just as new to this as you are. And I have little to no information about what that thing is, or what type of symptoms it has, how does it spread, what are the consequences, all that stuff. So yeah, I'm not too sure about what's going on that front. But we got about 4 minutes left for the markets to open. We've got our charts ready here. I'm going to switch over to the actual indices right here. And then we'll take a look at the S&P 500 returns over the last 95 years, the spreadsheet that I've created for everybody. All right, so this is the actual data. It's very simple, right? It's not super complicated. All we're looking at is historical years and how much the S&P 500 went up or down in that year. So if I go over by ascending here. So you can see the worst year for the S&P 500. This is only going back as far as 1928, I believe, going back as far as 95 years. So 1931, 47% decline, right? That was also during the time of Great Depression, 38%. 2008, 38%, Great Recession. Then we got 2002 here, 23%, 1970s and 1930s. So 1930, 28%, 1931, 47%. And then we've got 1937, 30%. 2008, Great Recession, 38%. 1974, during the time of inflation being really high, just under 30% loss here. And then 2002, during the dot-com bubble, we had negative 23%. And then 1973 as well, 17%. And now we have 2022 over here, negative 16% at the moment. So this is, again, not the worst year. Of course, we haven't closed yet. So we'll see where this number ends up, whether it's, plus minus 20%, 30%, 40%. We'll see what that number is going to look like. We still have about 6-7 months left for the markets to close, but obviously it's not been the best of starts for the markets. Let's just go by here. And of course, last 3 years have been very strong, right? Much above average. 2019, 28%, 2020. Hard to believe that 2020 we were actually in a recession. The US was in a shortest recession, but still the markets managed to close above 16%. And then 2021, 26% gain. So last 3 years have been very strong. So, it's only obvious for us to see a bit of a pullback, bit of a breather here for the markets. And 2018 also we closed down because Q4 was actually very brutal with the US-China trade wars. And we were going something very similar when the markets were down in a bear market, S&P, NASDAQ. So because we were so high from all-time highs, most of the losses came in the fourth quarter of 2018. So that's why we were only down about single digit there. 2016 is when I believe the Federal Reserve started their last rate hike cycle. 2016, I believe at the end of 2015, early 2016 is when they started raising rates. Last time, this was the previous cycle. And then they had to really pull back in 2018. But even despite all the rate hikes, the market still managed to go up 9%, 19%. So I think this notion that, markets are not going to go up with rate hikes is false, because we have historical data. We've seen that the markets have gone up despite the Fed raising rates. But I will say this is the most aggressive Fed we've seen in a very long time, right? In 2016, 2017, we obviously did not see 50 basis point hikes in one meeting, let alone 3-4 consecutive meetings of 50 basis points, right? The baseline is 25 basis points, so that's been kind of like the norm. And obviously we are doubling that every meeting, and we're doing it much, much faster. So that is basically repricing all those expectations, adjusting. The market needs time to adjust to that, and that's what's causing a lot of pain in the stock market right now. All right, so poll 76% still red and 24% green. I'm going to end that now, and we are ready for market open here. By the way, I read an article today where Tesla CEO Elon Musk will potentially be issued a margin call sub 400. So, all right, the power just went out, so my light just went out here. So I do apologize about the light and the beep that might happen now. That the power just went out. The power has been going out a lot. I was reading another article earlier today. There's been worldwide power outages. And obviously it's been hurting where I am a lot more than other places, but it's been going out like crazy, like at least 4 or 5 times a day. The power goes out. It's been a real struggle. Yeah, everything is going down. Markets, Caddy's power. Yep, I know. But here we go. NASDAQ is down 1.8%. We've got the S&P down about 1%. The Dow is still holding up pretty well, down about 0.5%. And individual stocks such as Facebook's down 7.8%. We got Amazon down close to 3%. And Tesla's down almost 4%, trading now under 650. But yes, I will take a look at the Tesla's article that I was able to find earlier today, and we can read that, because in that it was obviously mentioned about the $12.5 billion margin loan facility that Elon Musk has against his Tesla shares. And if Tesla were to dip below 400, the price that we calculated was roughly around sub 350, closer to 350. I think it was closer to 375, which would have meant a 67% drop for Tesla from $900 plus, right? The last time I was looking at that. So from 950, 60% drop would have been around $365, $350 was the level that I was anticipating that Elon Musk would have problems around those levels if Tesla were to come down. I think there's roughly around 13 million shares, according to that piece, where Elon Musk would be foresold those shares. 13 million roughly. That obviously is going to create a lot of accelerated selling pressure if that were to happen for Tesla. So Google down 7%. Wow. Look at that. Down over 5%. It's getting bought up here a little bit. Came down to 2,082. I probably should be one of the people that might be doing some buying here. Haven't really bought right now, but I should be since Google is down so much today. But Amazon's also down 2%. We've got PayPal down 2%. AMD and Nvidia, they're both down 2% each. And Apple is down about 1% right now. So who would have thought that a company like Snapchat can put so much pressure on the overall markets? QQQ, still we're watching that 50 EMA, that 50 exponential moving average. That's the monthly chart, 11,000. That's the level. If you see your alert, if any time during this week you look at your phone and you find the Nasdaq below 11,000, it's time to freak out. I'm just kidding. No, but it would be a very, very big technical shift for the markets. Stop what you're doing. Like if you find your phone and you look at the Nasdaq and it's below 11,000, stop everything that you're doing and join us during our live stream, because we're probably doing a live stream at that point. If the Nasdaq breaks up below 11,000. So Human Sounds, do you think TQQQ could be a long-term investment? Well, it's got a lot of decay, right? So volatility is definitely not in the favor of TQQQ. It's supposed to track the daily exposure of the Nasdaq ETF QQQ. So if the QQQ goes up 1%, TQQQ is going to go up 3%, right? 3 times up or down on the day. But that doesn't necessarily happen on the week, on the month, or on the year. So if the Nasdaq ETF drops like, let's say 30%, that would be a pretty catastrophic drop for the leveraged ETF. And even if the Nasdaq recovers back to all-time highs and even goes higher, that doesn't necessarily mean that TQQQ is going to also recover back to all-time highs or go higher. So the volatility and decay is definitely a big role. And if you can catch the levered ETF on a nice uptrend or a nice sort of like a bull market, then yes, you can definitely generate some very significant gains, but it all comes at a big risk, which is the downside. And especially in a market like this, when the Nasdaq is down, close to 30%, you will have TQQQ pretty dramatic fall from all-time highs. It's down close to 72%, right? So pretty aggressive sell-off here. Zoom earnings. Let's take a quick look. How is Zoom doing right now? By the way, the markets here rotating back down. We got the Nasdaq down 2%, S&P down 1.26. Tesla is coming down to 643. We still haven't taken out the low from a couple days ago. That was 633. PayPal is down 3.5%. We got Amazon down 3%. Nvidia and AMD both selling off, with Google also down 6% here. Incredible. Zoom here up 3.62%. So apparently they are pushing higher. So Zoom said first quarter revenue increased 12% year over year to 1.074 billion. That was the estimate. Estimate was just a little bit shy of that. So very strong beat there. Well, not a strong beat, but a good beat. The company reported quarterly earnings of $1.03 per share with a nice beat, estimates of 87 cents, and said it approximately has 198,900 enterprise customers at the end of the quarter, up 24% year over year. 2,916 customers contributing more than 100,000 in revenue over the last 12 months. That's up 46% year over year. And expects second quarter revenue between 1.1 to 1.12 billion versus 1.11 billion. That was the estimate. So a little bit on the high end of the expectations. And the company said expects second quarter EPS to be 90 to 92 cents per share versus expectations of 88 cents. So wow, Zoom reporting a very, very good quarter. Not only did we get a nice revenue and earnings beat, we also got a future guidance beat from the company. And Zoom guided for $4.55 billion in full year revenue versus the estimated $4.55 billion. And So they pretty much reiterated their guidance, and the estimate was $3.75 in the mid guidance here for EPS. Not bad, even though they are going to decline on a year-over-year basis, but that is still not bad. So 92 divided by 375, we are going to be trading on a forward price to earnings multiple of just under 25 for Zoom. So that is a good earnings, in my opinion. Not like a super strong A+ type of earnings because they didn't raise their guidance or raise their EPS guidance, but it was good. It was at least what Wall Street wanted to hear from the company, and what Kathy Wood at ARK Invest wanted to hear from the company as well. So that's something that they reported. All right, so all stocks are going down. Yep, so there's a lot of them that are just selling off here. InMode by price. So I've got a fair value on InMode around $23, $24. It was part of that shopping list calculator as well. So make sure that you do check out that video if you haven't already. It's included in that video and the analysis that we do. Powell speaks today? I don't think so. I don't think Powell speaks today. I think we just have the FOMC meeting minutes tomorrow. We had Raphael Bostic speaking yesterday, but I don't think we have Jerome Powell speaking today. Yeah, unfortunately, wrong day to give out ER for Zoom. I think it's pretty much the state of the entire market. Any company that gives out even great numbers, it's just the wrong market environment to be in. That's why I feel like IPO activity has dropped off so much, because nobody wants to IPO their company in a bear market, right? Because they want the most dollars for their investment, especially private equity investors. So they're only going to do it in a hot market. That's why I feel like we've been waiting for Discord. We're waiting for Reddit. We're waiting for Mobileye. And there's a few other companies that I'm really excited about for when they IPO later, either this year or later in the future. So okay, Jay Powell does speak tomorrow. So okay, so is he speaking today at 12:30 p.m. or tomorrow? I feel like, is it today or tomorrow? Okay, so Jay Powell speaks tomorrow. But yeah, FOMC meeting minutes also come out tomorrow. Oh, Powell does speak today. Okay. Let's see. So, Caddy, what is your price for Tesla that you're waiting for it to come down to? I've already mentioned it before, but I'll say it again. Sub 600 is what I'm really watching, but 475 is a very conservative EPS expectation for Tesla. And that's me being very generous, right? I obviously don't give out 50% growth rates for earnings per share over the next 5 years for any company. Tesla is a bit of an exception because Elon Musk is pretty confident that he's going to be able to do that. So I am giving 50% compounded annual growth rate for earnings for the next 5 years for Tesla. If that happens, great. If they do more, that's even better. But if for any reason they miss or they do lower than 50%, then boy, oh boy, that fair value is going to drop like a rock. And it's going to come down to probably like in the 300s if you take a look at that fair value for Tesla. So 50% is the growth rate that I'm using, and a 25 times multiple on the earnings gets us to about 475 fair value, but I'm okay just nibbling in sub 600. So that's a level that I'm really watching for Tesla right now. Meta Platforms down almost 9% now, sub 180 again. Google's down 6%. Incredible. Whenever you see a lot of companies IPO, sell everything. Yeah, I think that's a great indicator. I think, Brandon, you bring up a great point because they do usually IPO in a very, very hot market, right? So think about all the SPACs and IPOs we got in 2020 and even in 2021, but that volume has obviously dropped and the IPO market's pretty much dried up over the last year, couple months. It's just another day in 2022. The NASDAQ is down 2.3%. It's just like another day in 2022. It feels so normal. Are Google and Facebook at the same price point? Google at 2,093. Let's see. And Amazon is at 2,082. This is incredible. Today you can pick up both Google and Amazon at the same price. Incredible. And did you know? So that's something that's coincided with Google for Amazon. They're both trading almost at the same price. But if you take a look at Amazon and Tesla, they're both down the same amount. So Tesla from all-time highs is down about 47%, and Amazon from all-time highs is down about 45%. Almost the same amount. Amazon is down 37% year to date. Tesla is down 38% year to date. They're both down the same amount, and from all-time highs and year to date, and Amazon and Google also trading almost at the same price. And they're both doing splits, so they both have splits coming up very, very soon. Kind of an interesting market we're in. So from the list you did, Caddy, what with coming IPOs, I think only Databricks makes sense. Their product and moat is incredible, and they are getting a lot of traction. You don't like TradingView? I like TradingView. I think they also have a big moat. They're also very easy to use. They're in my opinion, one of the best charting softwares out there that you can utilize. So I like TradingView out of that list. I also like Discord. I mean, Discord's got huge potential. It's widely utilized, and it's got a lot of potential within the US as well. So I think Discord is kind of like a little bit different than other social media companies, right? You can build out actual communities, and you can have those types of conversations around what you're covering, whether it's gaming, whether it's stocks or whatever. So I think Discord and TradingView also has a lot of potential. And even Canva. I don't know how many people here use Canva, but Canva is also in that space where it's a software as a service company and has a lot of potential. So Discord, I think it is profitable, right? So when I did the analysis, there was at least 3 companies that were actually profitable, is what they mentioned. Not sure if Discord was part of it, but 3 companies were already profitable of those private companies. But most of the time, Discord is going to be profitable through the subscriptions that they charge for, right? So all the creators, content creators, can actually pay subscription to Discord, and that's how they actually make their money. But advertising could be a future as well for the company because they've got so many users on the platform. It is a glorified chat room, that's for sure. I think Telegram is one thing that they do compete with. Yeah, no, that's a good point. Easier to disrupt or not. Let's take a look at Upstart. Upstart's probably getting destroyed right now in this market. All right, so we're down 7%. So that's exactly why it's so important to hedge some of your positions, right? So we've got a covered call on this $55 strike. That was my strike price, and we got up to 53, right? So we got up to 53, and then now we started to drop right back down for Upstart. So that's a good thing for that covered call. Obviously not for the underlying shares, but for the covered call, that's a good thing because it lowers my cost basis. It allows me to collect that premium, and it's a perfect hedge against your long position. So Upstart here down about 8.8%, kind of in line with the markets and what we're seeing right now. Snapchat down 38%. Oh man, it wasn't even a requirement. That was such a weird call from the CEO. Like, why would you, it's not like the SEC wants you to report, okay, tell the investors that you're going to miss expectations. Like everybody would have known when the earnings came out. But yeah, such a strange way to go down. And you gotta, Evan Spiegel needs to feel the environment, man. Come on, feel the macro. You can't just drop that type of news in this market. You gotta feel what's around you. You see companies on great earnings going down, and then you come out with a fantastic announcement. But anyway, Google Meta Platforms is down almost 10% now, down to 177. He was being honest. Yes, a price you gotta pay for honesty. Yeah, and then Meta obviously getting killed. AMD and Nvidia also. Nvidia, for example, down 5% right now. Tesla's holding up pretty nicely, still down 4% though. Alphabet down 6%. It pretty much, has a big advertising component to it. Amazon's got a big advertising component to it. And then of course we got other companies like Trade Desk, Pinterest, some of those companies also selling off here. So Dow 30 names, I see green. Banks are doing much better again. Back-to-back gains here. JP Morgan up over 1.7%. We got McDonald's, Coca-Cola, IBM, Merck all pushing up here. Let's take a look at here the entire watch list. It's just a bloody day. Snapchat down almost 40%. Pinterest down 22%. Trade Desk 20%. Roku 14%. Upstart 10. Shopify is down over 9.5% again, down to 333. AMC, we got Cloudflare, Neo, Square, Coinbase, Datadog, Mara. Wow. Nasdaq almost 3% down. It hasn't even been 17 minutes into the open. Yeah, no, that's true. Looking at the situation with Upstart, you could have been assigned to sell Upstart for $55 and now buy much lower. Yeah, that was the whole point, right? So I mean, if you sell a covered call, you get premium, and then of course you can lower your cost basis. And if it does come down to some lower prices again, I can dollar cost average and buy even more shares. So again, the long term remains unchanged for Upstart. I mean, they're still expected to grow 57% year over year. Earnings are, yes, they're expected to slow down a little bit, but they're still at under $30, like an insane deal in my view. We've seen a nice little bit of short covering on Upstart. That's one of the reasons why it went up 80%, 100% from its May 11th lows. But the fact that it's coming right back down doesn't really matter. Yeah, Meta Platform's down so much. Is the S&P 500 a bear market? Not quite. 3850s below that level, it would be in a bear market. But I do think the Nasdaq is now down over 30% from its all-time highs. 11,000, everybody. 11,000. If Nasdaq breaks below 11,000 any day during this week, regardless of what time it is, I want everybody to come to the channel and comment on the live stream. Just alert me to go live, because I'll also be looking, but we gotta watch that together, because that would be a big 14-year trend breaking down on the Nasdaq. 50 EMA would just be destroyed below 11K. So but yeah, Nasdaq is now down close to 31% from its all-time highs. Just to go back to all-time highs, it's gonna take us a good 44%. 44%. It's not an easy thing to do. Mohammed says we will meet tomorrow to watch Nasdaq under 11K. Come on, man, you can't say that. The monthly chart, we gotta at least hold that level. This is the deciding week. In my previous video, I mentioned that this is like a very critical test for the bulls, and of course the bears are going to try their best to bring us back down here below 11K. But yeah, the last time we actually broke down was back in 07-08, right, during the Great Recession. So fundamentally, nothing really would change. I mean, valuations are cheap; they would just get cheaper. Multiples are lower; they will just get even more lower. From a fundamental valuation standpoint, macros would still be unchanged. The only thing that would put pressure on are the technicals, right? So if you look at this overall trend, I'm sure there's going to be a lot of stops under 11K on the Nasdaq. Margin calls will get issued, and then of course algorithms will be watching that level very closely, and that would, just on a technical standpoint, would be a big shift for the markets. Even during the pandemic, I mean, you'll notice that we came down, but we didn't quite close below that 50 EMA, right? We didn't close below that level. So in May, really, I mean, if it closes below 11,000, then it's on. It is war between the bulls and the bears. Change the color. Yeah, we can do that. Like, let's just do invert, and then we'll just change the color here. We'll do red for this one and green. So we're doing good, right? We're almost about to break out over 11,000. Almost. That would be a nice breakout, right? Time to go long. But anyway, let's see. What is that damage here? So Google is still down 6%, PayPal down 3.5%, AMD, Nvidia down 3%, 4% each. Amazon and Tesla also down about 4%, 5%. Volatility here. This is so crazy. Like, volatility still is not moving. It is still unfazed. There's no movement on the VIX, despite the S&P down 1.22%. Nothing. The VXN is up, so NASDAQ obviously much more aggressive here, with the VXN up 6%. Zoom lost all the gains here. Wow. So just selling off intraday. And the yields down to 2.774%. Oil prices once again looking to break out, as Russia, I think, is also looking to cut the gas to Finland as they submit their bid for NATO. So that could put a lot more pressure on oil prices still for the short term right now. And then Ethereum, just under 2,000, more or less consolidation here. And Bitcoin also just consolidating sideways, holding on to that support. Arjab, yes, the channel name is now Moneyvesting. It's not my name anymore. So, yeah, that's a new name of the channel. There goes the power again. What the heck is going on? God, this is so frustrating. And it's so hot in India also that as soon as the power goes out, it's like I start sweating within minutes. It is so frustrating. Power goes off and the market sells off even more. I think there's a lot of correlations to that, because recently the market's been selling off. Recently the power has also been going down a lot more. Eddie, are you in cash? Not completely in cash, more or less like 6 to 8% around those levels. But yeah, ready dollar cost average even more if the market sells off, breaks down, and some of those levels get hit. I would love to buy more. Paul says caddy red mic and now no power is the most bearish thing for the markets, I feel like. So do you think InMode will go under $22? It's possible. Absolutely. I think, anything is possible in this market, so I don't want to rule anything out. But and if I show you guys InMode's fundamentals, I mean, it's one of those companies that has the best fundamentals right now out of all companies that I've analyzed. We take a look at the balance sheet, we take a look at the growth and everything for InMode. It's been really, really strong. I mean, even the valuations come down to some insane levels, like it's trading at 11 times forward earnings, right? So if you do the math on earnings yield, 1 divided by 11, you're getting an earnings yield of over 9% with InMode. Free cash flow also trading at 11, so you got a free cash flow yield of 9% with the stock. Price to sales at under 5. Enterprise value to EBITDA 7.7. So valuations are just insane. And then the margins are also great. I mean, it's got 84% gross margins, 45% net income margins. The bigger issue, I think, is that they were on a big tax break in Israel. So that's one of the reasons why their earnings may start to slow down a little bit because they will be paying taxes now. So, but even then, I mean, they've got one of the best balance sheets. They've got, you know, over $400 million in cash with little to no debt, strong revenue and earnings growth. I mean, fundamentals make so much sense for InMode at these levels, but it's just the market is obviously not in the macro environment where anything is going to go up. Guys, make sure that you drop a like also. I would really appreciate it, so it helps push this stream out to more and more people so that more people can join us in our pain and help console whatever is happening in the markets. But yes, make sure that you drop a like. I would really appreciate that very much. Nasdaq almost 3% here. Yeah, will the stocks U-turn today? It's hard to say. I mean, on Friday we got down to 11,000. It was such a quick recovery for the overall markets. So if you take a look at the Nasdaq on the 5-minute chart, you know, you take a look at where we came down to on Friday. This is the entire Friday's price action, May 20th. So intraday we sell off 4.4%, right? Pretty brutal drop. We perfectly come down to this 11,036 level, which once again, if you come over to this monthly chart, that's 11,063, right? So 11,063 is that monthly chart. And then on Friday, we came down to 11,036. So we did breach that level, consolidated sideways a little bit, and then a strong rally into the close, pushing up over 2.37%. And this is Monday. We basically pushed higher, sold off, had a decent day, jumped over 2% intraday, and then today we're just gapping down here. So on the 5-minute time frame, sure, we've got a small gap to fill here, but like I said, the biggest support is going to be that 11,000 from Friday, if we hold up that level or not, whether we break down or we get the buyers step in once again those levels. We've flirted with that level a couple of times. I mean, this is May 12th. Once again, we come down to this support here at the time, sitting roughly at 11,100, around those levels a couple times. So gap down here, push higher, come back down, push higher, then gap up, consolidate sideways for a little bit, and then come right back down. And now we're just like around those levels again. Nasdaq's down almost 3%. Tesla down to 635. We're $2 away from breaking our low from a few days ago. So the daily chart, the low for May 20th was 633. We're like almost there. I'm almost ready to pull the trigger here. It's like so close for Tesla. But we got to be patient. Caddy, do you prefer Google or Amazon at this price today? So Google fair value is around $1,800 according to my very conservative estimates, and Amazon fair value is around $2,000. So I would prefer Amazon at these levels over Google, just based on fair value and looking at my conservative estimates, which I'm sure you guys know my shopping list that goes over my estimates and my PE multiples, and you can play around with those numbers. By the way, Tesla just broke a new 50, almost a new low here from a few days ago. Still not a 52-week low, but we are now down to $630. Man, Elon Musk is under some severe fire right now. With this Twitter deal, I think that's just adding a whole new level and layer of complexity with his Tesla company and with his own personal finances as well, because it's like such a weird situation where he can't walk out. He needs like actual very, very solid reason as to why he's walking out. Dan Ives has also mentioned from Wedbush that he's using this bots topic as a scapegoat to get out of that deal, or at least lower the price for Twitter. But man, Tesla. Sahil from India, what's your view on NASDAQ and Dow? I mean, overall, I've shared my view on the NASDAQ and the Dow Jones. NASDAQ's down close to 30% from all-time highs, so we're in a bear market. Dow has held up much better since it's got more value names compared to the NASDAQ. But it all depends on the macro environment, right? So there's a lot to discuss. There's a lot to that question. But overall, I think it's going to take some time, at least until September, till the dust settles. We've got a much more visibility on inflation, the Fed pivots, and then we can start to see some sustained rallies in the markets. Until then, I think the markets are going to be weak. And technically, we remain oversold for a lot of stocks here. So would you buy Upstart in 36 today? I would get it. I would allow for it to come under $30 for me to be more interested in Upstart. But Tesla down to 627. Yeah, Siddharth. So I actually did a video, my shopping list update. I'm planning on doing that update like maybe every 2 weeks or every 1 week. It's got a list of stocks that basically has, let me just show you guys. All right, so right here, it's just got a list of stocks that I'm tracking. It's got their fundamentals, so we're looking at the actual revenue, we're looking at the earnings. So this is the entire list. So far, I've got about 17 stocks, and again, we're looking at the price, we're looking at how much they're down. They're almost all of them are in a bear market right now. Some of them are down more than others. We're looking at the revenue growth. These are all in billions. The growth rates, the earnings per share, the growth rate for the earnings, the balance sheet items, so cash to debt, debt to free cash flow, the net debt to EBITDA, total assets, total liabilities, current ratio, all that stuff, and then forward valuations, the multiples that they're trading at. And then this is where we forecast for what that growth rate could look like for the next 5 years. This is analyst consensus growth rate. This is my personal growth rate, which barely exceeds 20% or 25% because I'm being super, super conservative. And then price to earnings multiple also more on the reasonable side for these companies. I mean, I'm even giving 16 times multiple, 18 times multiple for these companies, right? 18, 20. I don't go above 25. The only two stocks that are 25 are, the only three stocks are Apple, Nvidia, and Tesla, for which the earnings expectations are also much higher for them. So they're the only three companies, and Amazon. So only 4 companies that have a much higher PE multiple, and this is the fair value for all these companies, market price, and how much they need to come down even further. So Apple 115, Amazon closer to 2,000, Netflix 148, Facebook's already at fair value despite all these conservative numbers, and then of course Google at 1,800, Tesla's at 475. So we're a long ways away from those levels right now. But yeah, I mean, this is just Darius, yes. So I mentioned in our market update as well, in the morning updates, market updates channel, that Amazon sub 2,000 I would be looking to kind of add, and for Google as well, sub 2,000 I would be looking to add more shares. Yeah, I think today Elon Musk is also chatting with Twitter and the shareholders there. Google down 7% is like insane. Absolutely crazy. And even Apple like couldn't hold on to any of those gains here, down 3%. Tesla is getting bought up. 627 was that support. Technically 621, roughly around those levels. We have found some support in July of 21. So we do have buyers stepping in around those levels, but really, really oversold. So now NASDAQ stocks trading below their 200-day moving average. We've got over 83% stocks now in the NASDAQ trading below their 200-day moving average. We're almost back down to the same level as we were back in March 2020. We're back down to January of 2018, December 2018, January 2019 levels. So we're almost down to those levels where we were 2 bear markets ago in 2020 and 2018. So can you share this file? Yes, the file is available to download in our Patreon. So I've actually shared this with everybody there. And there's also a Google spreadsheet that you can also access from over there. Yeah, there's absolutely no capitulation in sight right now. ARKK. So Mara is going to be, unfortunately, be affected by Bitcoin, right? So it's down 10% today. Coinbase is down 10% today. Riot is down 9% today. CleanSpark is down because Bitcoin is also selling off. There's just like a complete risk-off environment for a lot of these stocks. So they're going to be under a lot of pressure, tremendous pressure right now in the short term. And that's the entire market that we're dealing with overall. Are you buying Zoom? No. Zoom fair value, I think, ended up at around $47, $48. So that was a level that I was able to calculate for Zoom. So I'm not super interested at these levels, but yeah, if it does sell off even further, then sure, why not? ARK now sub $40, and this is going to be the level 34.75. That's going to be the support for ARK right now. Google's down 7% today. That is incredible. What is the current average price on Google? My current average price? Probably like in the 2300s, or might be a little bit higher. Yeah, it might be around here, 2400 on Google. But even on the monthly chart for Google, it's coming down to that 50 EMA, which sits at 1854, which is very much in line with the fair value that we've calculated, right? So I think that would be like a no-brainer on Google. 1800, 1850 would just be like that last resort price on Google, around those levels. Upstart here, wow, 3650, so down 13% today. What a U-turn for so many stocks. Shopify, 9%, down to 332. I think that's, we saw these stocks getting shorted. There was a week when they went up substantially. We talked about it. It was mostly a day when shorts were covering. And now we're back in that overall trend of these stocks selling off even further. And then just pulling back. How is Netflix doing? Netflix is 177. This stock is just holding up right now. 177 is that level to watch for Netflix. But fair value is around 147, 148. Would be very interested around those levels. AMD is now under $90, so sub 90 again for advanced micro devices. CrowdStrike, 139, so selling off a little bit here. Can you imagine? Snapchat did this. One company. Like, other than that, I don't think there was any other significant news from the markets overall, right? One company took down the entire market. You got S&P down 1.89%. Incredible. Incredible. Snapped us right in the face. Yeah. I love that meme. It's like Eminem from 8 Mile. Snap back to reality. It is those lyrics, right? I'm pretty sure it was that meme. Let me just see very quickly. Yeah, I think it's, there goes gravity. Oh man. Whoever posted that in our Discord is a legend. But yeah, wow, 3.5% on the Nasdaq, S&P down 2%. Spreads are still positive except for 10 versus. Oh, this also turned positive here, up 171% as the 10 years come down a little bit. So the spread between the 10 and the 5 has also turned positive here. Uber is down 9%. I mean, what isn't down 9% in this market? 9% is kind of like a rookie number. You got to talk to the big dogs like Snapchat and Pinterest and Trade Desk. 20+%. They're down. Upstart, 12%. And now the VIX decides to fly here. Up 6%. Back over to 30. Still has been more or less just consolidating sideways. Hasn't really done much. So now we're under 3,900 on the S&P. So the best deals of my life, especially someone's missed out on 2008 and 2020 crashes. So yeah, I mean, if you look at some of the metrics, you know, in terms of oversold markets, in terms of how many stocks trading below their moving averages, in terms of relative price earnings multiple valuations, a lot of it makes a lot of sense. But we have covered so many reports from fund managers to institutional investors to different banks and their perspective on the economy and inflation and interest rates. And we all come to the same conclusion that institutional investors are not interested in any equity exposure right now. They're much rather prefer to sit on the sidelines, wait for all this volatility to kind of die down, and for us to get some more visibility and clarity into inflation and whether the Fed is going to be more or less aggressive over the next 3 meetings. So that's the type of dislocation we're seeing, as institutional are just not in this market with any type of heavy buying. And at the same time, we've got hedge fund activity with the short interest going higher for a lot of stocks. They're just getting in and out of sectors, liquidating positions. And then of course, retail's position for the long term, mostly in some of these stocks, whether it's through a 401k, you know, Roth IRA, or just individual investment accounts. And that's the type of dislocation that we're going through in this market. And a lot of it has to do with some macro environment factors, nothing to do with the actual company or the quality of the business. Sure, earnings, there's a little bit of a growth scare. The earnings are going to slow down. That's also something that we talked about in our yesterday's video, where EPS expectations right now, if you take a look at some of the other spreadsheets here, where did that one go? Okay, right here. So EPS expectations are still at roughly 13%, right? So $235. Now, if this number gets revised down to, let's say, 220, then we're only growing 5.7%. If earnings per share actually end up under $208, let's say that they're going to be 205, then we're actually going to be declining by 1.44% on a year-over-year basis, which is what the growth scare will look like. Then earnings per share $205, and then you plug that in, let's say, to our actual sensitivity analysis, 205 over here, right? So, and then we have the S&P at 3,800. We're still returning at 19 times earnings, which is still rich compared to where we have traded in the past, right? 15-year average is 19, 32-year average is 19.5, 10-year average is 19.7. So then if you come down to 17 or 16 times multiple, we're looking at the S&P at 3,550 or 3,300. So EPS is really important. Of course, the multiples the markets are willing to pay for it. So DM says Facebook is back to where it was 5 years ago. What a trash company. A little bit of rephrasing there. Facebook stock is back down to where it was 5 years ago. What a trash stock. Wouldn't necessarily call the company trash because the fundamentals have obviously nothing but grown over that time period. Record cash flows, record revenues, record earnings, record users. Everything's just been moving in the right direction. The stock price has obviously been nothing but trash. I agree with you there. Those are all two different things, right? Stocks different from the company itself. But look at this. I mean, Amazon down 5.5%, almost on the verge of breaking $2,000, hitting a new 52-week low. Tesla's down to 631. Google down 8%. 8%. Meta down almost 10%. We got Nvidia down 6%. Fair value for Nvidia roughly in the 125s. Apple's down 3.84%. And PayPal down 4.4%. No buyers. Absolutely none. Like on the 5-minute chart, it's been what, 45 minutes since open? And we have got no buyers. Whoever bought in this 5-minute candle at 950, NASDAQ was up 1 basis point, and then we just resumed our selling. I might as well just wait here for the NASDAQ to come down to 11,000 to see if there's any buyers present at those levels. Because we're only 100 points away, and it's like, in this type of market, it's only a snap of a finger, and we're almost there. Even the Dow 30 stocks are selling off here. So Boeing, Disney's down 4.4%. We got Apple, Salesforce, Visa, Microsoft. And JP Morgan was up, but it's now pretty much flat here. So even the Dow, is dropping pretty aggressively now. And you know, it's like days like today when you've got so many stocks, all sectors selling off like this is when you really find these overexposed, overextended deals in the markets, because these are more likely to kind of ratchet back higher very quickly. And you know, just look at this. So Procter & Gamble, Coca-Cola, Pepsi, these are the Dow 30 stocks, some of them still holding up. Healthcare is also holding up a little bit, but energy is down, real estate, you know, industrials, utilities, materials, financials, and of course, don't even get us started on cyclicals or communication services or technology or software. They're all just been brutally down. So 11,094, we are approaching that level. That's the critical test. 11,000 on the NASDAQ. I do think that we're going to find some buyers stepping in here very soon, but anything is possible. What do you guys think? Let's do a poll. We got over 600 people here. This week, is the NASDAQ breaking below 11K? All right, I'm doing that poll. NASDAQ, question mark, breaks below 11,000, holds above 11,000. So let me know what you guys think. We got over 600 people watching. I want 600 people to participate in this poll so we can get more data here. 8th week of red. Yes, this is going to be the 8th week of red for the markets. S&P 500 really dropping down, almost entering a bear market again. By the way, how many of you guys... So in my previous video, I also mentioned that we had over 3,700 articles written about mentioning a bear market in the US last Friday. That was just an insane statistic, if you think about it. And the highest we saw was 6,000 articles back in March of 2020. So last Friday, when the S&P briefly entered a bear market and then recovered, we had over 3,700 articles in the news media and the financial websites talk about a US bear market. That is crazy. But yeah, we're almost down there, down about 19.5%. So 38.79 is where we are at. So Alex, do you know what is a record for a continuous red week? Yes, it's in the 1930s. 8 is that number. 8 consecutive red weeks is the number for a record losing streak on the S&P 500. So if you break, well, if this week is red and the next week is also red, then we would be at a record, new record, fresh for the S&P 500's history of consecutive weeks of losing money. That's a great record, right? At least we have some one record. Obviously not the record that we want, but so we are going to make history. Yeah, we are possibly going to make market history here. All right, another candle just opened. Let's see if this candle closes green, because so far none of these candles have been green for the NASDAQ. Not a single candle in the first 50 minutes has been green. But all right, let's take a poll here, and also make sure that you guys drop a like. Right now we've got 200 something likes, so make sure that you also just tap that like button if you're enjoying the stream. But we got 65% people expecting for the markets, for the NASDAQ specifically, to break below 11,000, and 35% expecting that the bulls are going to hodl above 11K. So what is your fair value in Shopify? Shopify, I'm a little bit undecided, and they're kind of in a weird situation because their earnings per share have just recently turned positive, so they are turning the corner towards profitability. That's exactly why they're trading at such a rich multiple at $333. Earnings per share, it's $2 per share, so that gets us to a price to earnings multiple at 150. So I'm not really comfortable assigning, if I go with a 25 times multiple, then Shopify's fair value is at $60. So it's a little bit weird. I'm just waiting for the earnings to really go up dramatically, like we saw with Tesla, and then I think I would be a lot more comfortable making a sound decision on Shopify. So there we go. Possibly the first green candle in sight after the 50th minute. We'll see if we actually close with the green candle, but AMD seeing a bit of a recovery here. So is PayPal. Google is down over 8%. Tesla down 6%. Amazon 5.4%. Meta Platform is down almost 10%. And Apple almost down 4% as well, with, of course, a lot of stocks here down double digits. Snapchat down almost 40%. Yeah, 11,000 might be a psychological edge for a rebound for the NASDAQ. We also have a potential bullish engulfing candle, right? So that could intraday mark bottom. We'll see. Yeah, Shopify has a stock split next month, 1 to 10. Amazon also has a stock split coming up in July, I believe. And then Google also has a stock split coming up. Hattie, would you go short in this market with a call option as protection for the upside? I mean, are you talking about selling covered calls to hedge against potential downside in the market? Or are you saying, yeah, like if you were to go short, why would you buy a call? There we go. We do have a little bit of buyers present here, right? So NASDAQ pushing higher. So now the S&P 500 is... Okay, so Amazon stock split in May 27th. So from the pre-pandemic levels, S&P is only up 14% right now. 14%. And for the NASDAQ, I think we might be up a little bit over 20% from those levels. Actually, I'm not too confident about that. We're up 13.3%. Incredible. So from February of 2020, the NASDAQ is only up 13%. The S&P is only up 14%. Dash, hello to you too. Thank you so much for joining. So yields still up 66% year to date. Energy still up 40+%. Mining's ETFs up 11%, and then everything is just like in the toilet. All right, so that's gonna be it, everybody. This has probably been a very long live stream, longer than what we usually do, but I think desperate times call for desperate measures, and of course longer live streams as well. So thank you so much for joining, and I promise the green mic is on the way, and it will be replaced very soon with this crappy red mic that ever since I got the market have nothing been but straight down. So just drop a like for the green mic, not for me, but drop a like for the green mic, and thank you so much for being here. I really appreciate it. Subscribe if you're new to the channel, and also check out the Patreon link and a Discord link down in the description below. We give you access to all the Excel spreadsheets, all the downloadable stuff, my notes, PDFs from any type of research stuff that I read. And of course, you get access to our private Discord channels, buy and sell alerts, everything. The link's going to be down in the description. So I know, tough market, very painful, but this is not something that we haven't experienced already. The markets have gone through this time and time again. And again, if you look at the spreadsheet yourself, there has been pretty brutal years, right? Talk to people that have lived through 2008. Talk to people that have lived through 2002. Find somebody, if you can, that has lived through this 1930s sell-off or 1930s sell-off, right? It's been much, much worse than what we're going through in 2022 with a 17-18% drop in the S&P. And of course, a lot of stocks are down much more, but it's not the first time. It's not the last time either. So thank you so much. I really appreciate it. As always, happy investing. I'll see you guys first thing tomorrow morning for another Market Open live stream.